I was reading this book by Gautam Bade, and it's called The Power of Compounding. And one of the key things that we discuss when we are trying to build wealth, be it in the form of trading or investing or, पैसे कमाना है, intent पैसे कमाना है, right? आप trade करके कमाओ, short trade, slow invest करो, doesn't matter. But one of the things that comes out is the power of compounding. And a lot of people who start young in the market, or a lot of people who are still young, do not appreciate this fact. And I think there is a lot of buzz flux around using certain trading technique or using AI or using a bunch of or a combination of these to make faster money. So this video is for all of you if you believe markets and if you want to make money over a longer period of time. I think what is long is something to be discussed and understood in a very nutshell. So unless and until you start with a significantly high capital, then the conversation is different. For a general 75 percentile of the country or 80 percentile of the country, where the salary bracket is between 25,000 to 50,000, and I think less than 1 lakh would be close to 95% of the country. So it's that's not the starting point. So for that large group of people, that India, we need to understand how to invest for a longer term and build wealth in a longer term perspective. So this video is for that. uh, I'm doing this in Python. Why in Python? क्योंकि कर सकते हैं और कोई कारण नहीं है. uh, Can this be done in Excel? Absolutely sure. Is this data available on the internet? 100%. There's nothing new in this conversation. I'm just trying to explain you through rational, and maybe if you see with a little bit of code, it will be fun too. All right, so let's get started. So I will start with putting a simple bunch of assumptions. This is not around stocks per se. The money could go anywhere, typically speaking, and I've tried to give you three different baskets. And in the end, I'll talk about how should you think about this. Think of this video as more as a personal finance video or a recommendation video than a trading video or an AI video or things like that. Python video तो नहीं बोलूंगा मैं इसको. So the first line is very simple. I'll still walk through the code. Uh, Import matplotlib as pyplot or plt, basically numpy and simple code है, कुछ भी नहीं है. पैरामीटर्स क्या है मेरे? सिंपल पैरामीटर्स. मंथली इन्वेस्टमेंट 10,000 रुपए है, बहुत स्मॉल स्टार्टिंग नंबर है. And I think this is a good number to talk if you are earning somewhere between, you know, less than 1 lakh rupees. And obviously, a chunk of money goes towards secure investment. जैसे पीएफ से लोगों को बहुत लगाव है. While पीएफ might not be a great return investment, 8% के आसपास आता है या उससे भी कम आता है, but people love that, right? People still take that. So post deductions, whatever you get, let's say you invest 10,000 and you can do the multiplication yourself. It's very, very straightforward. Period of investment, I've kept 25 because I wanted to really show where money is actually made. When do you get rich? Or when do you become, retirement age के लिए कितने पैसे चाहिए उस side से. So 25 years, ideally, if you are much younger, you could even do 30 years planning, but 30 years बहुत मुश्किल होता है मेरे लिए तो. इतना भी नहीं बनेगा. Like I'm 35, I think. So I'm not thinking of 25 more years of earning cycles. I'm probably thinking of 15 to 20 at best. If I can do faster and get financially free, would be great. So a bunch of simple parameters, loops to just calculate and keep on iterating, apply a simple formula कि return कैसे आता है, etc. etc. Nothing big there, just regular formula of compound interest. And then some bunch of plotting code, mark the different periods by lines and stuff like that. So this is what the line is. So if you start by 10,000 rupees, right? The fun part here is whatever rate of interest you start. Okay, whatever rate of interest you start, be it 8%, 12%, or 16%, and I'll talk about why I've taken these numbers. In the first 5 years, it does not matter. You are not really building anything at all. So I'll probably also show you this to you by a tool that I use, SIP calculator, simple. This is from Grow. I keep using it all the time. So let's say if you put 10,000 rupees at 8% for 25 years, let's say 5 years, take 5 years like that. So you end up with 73,000. If you increase this to 12%, you increase at 82. and you do this 16% you get है तो not a significant amount of difference मतलब 10,000 रुपए का अंतर पड़ गया 5 साल में I don't think there's any sorry I think I made a mistake so 1,000 ले लिया 10,000 लेना चाहिए था so 8 पे कितना था 8% पे we were 7,39,000 12% pay, we were 8 lakh 24, and 16% we are at 9 lakh 22. So still small difference compared to the total quanta of money you're looking. All right. Now, as things progress, as you get more from fifth to 10th year, you can see that the graphs are slowly increasing. And as you move from 10 to 15-year period, 15 to 20, and then 20 to 25 is a much larger tilt in terms of money. The red line is showing the amount of money investment. So you can measure the delta that you end up at all points in time, the spread of the data. यहाँ पे spread बहुत कम है, यहाँ पे ज़्यादा हो रहा है 16% का, and likewise and so on and so forth. So that's essentially the power of compounding. So what is this telling you, and what is the message from this? Right? A, you have to be invested for a longer period of time. It does not matter whether you use a trading strategy or a AI based investment strategy, or you simply buy mutual funds. You need to think of it as a very long term growth. Ideally, there are more buckets to fill, like midterm goals, short term goals, etc., which is a different discussion. But money is always made probably in a longer term. So when you hear of people like Warren Buffett, you can go and look up how rich was he at 40 years of age. You would not find that much amount of data. He probably got rich after he was 50, and I think there's data to back this up. I have read this somewhere, don't misquote me on this. The second part of the conversation is that you need to think of returns not as an absolute number but as a varied parameter, which means that there will be a bunch of investments which are more secure, which have lesser risks, the PFs, FDs of the world, PPFs of the world, which will still give you 8% return. Unlikely that it's gonna even beat the actual inflation that you're hit with. Unlikely that it's gonna help you compound or build wealth, but it's not gonna let you lose money. 12% is where people normally say as an average for Indian market. So over 25 or 15 or 20 years of age, years of investing, you could do 12%. And 16% could be an aspirational number. You could invest a part of your portfolio in higher volatility or larger risk things. So the way to think about is A, the parameter is time frame, कितना time के लिए मुझे invest करना है, and B, क्या rate of return उससे expectation है. And finally, it would be also nice to say that this is tied to a certain goal, so that you can simulate in your mind how much critical that goal is, for example, and how far it is. If it's for a higher education, you are, let's say you have just started your career, you're in first or second year of work, and you're going to get an MBA degree 3-4 years down the line, the time window isn't very high, uh, and you cannot afford to lose the capital. So you'll probably put in simpler instruments, which is giving you decent returns between 8 to 12 in a lower risk kind of a category. But if the goal is to, I don't know, buy a house after 10 years, you could probably be more optimistic there and take a mix of these ratios and proportionately put a larger chunk to a certain different category. And then fundamentally, if your goal is much longer term ki bhai bachcho ki shadi karni, I don't know if the younger generation is still interested in having that conversation, but you could think of the different proportions. So, or building a retirement corpus could be a better game. So you can think of different rate of interests over different time periods and build your investment or trading or whatever strategy you want to call it in that chunk of it. So yeah, that was the intent for this video, to talk a little bit more about how to think of money. Now this is more from a personal investing lens. So yeah, if you have liked this kind of conversation and are interested in more personal finance related stuff, me to cover more mutual funds, other investments, put in the comments and I'll try to make videos around them as well. Stay tuned. There's a bunch of things coming around options and a little bit of more deeper research into some of the areas. Hit like if you have liked the video, dislike if you have not, subscribe irrespective because I keep making these videos, and that means a lot. All right, thank you.